Why haven't we seen a bigger market crash? Or why is S&P 500 right now rallying? Many are calling it now possibly a new bull market, or the worst is over. If you're looking for confirmation from this video, sorry. Instead, I'll be giving you alternative point of views to explain what has been going on, this downtrend as well as this sharp jump. And I'm not relying on charts. I'm looking in terms of history, especially lessons on history on war. If you're looking for something that you cannot hear anywhere else, continue watching on. Hi guys, welcome back. I guess I'm a history buff. If you have followed this channel for quite a bit, you do know I like to dig in terms of history to really try to understand what has gone on before, because that could happen again. I want to get ready. I want you to get ready also. So you do know I have good information, and before I get started, help me smash on like button so that we can share this information, share this deeper thinking, deeper concepts to a bigger audience together. Firstly, what has happened in the Gulf War? That is one of the more recent big wars. And if we see from this chart over here, we realize that in Gulf War, which happened in Kuwait, markets actually crashed. That was a decline of about 16.7%. And what I would like to point out is this period over here in August, whereby there was a new crisis point. Westerners were held hostage. That's why it concerned the rest of the world. Iraq wasn't cooperating. They were winning the war, things were looking bad. That's why markets were looking distressed, because oil prices could surge, very similar to what has happened now. Market has continued to drop all the way to mid of October 1990. Now, why has market actually rallied? That's a surprising question, correct? Markets actually are having years on the ground. What could happen? Market is looking ahead. That's why when crash comes, we don't sell, because market has already seen that. Or when markets start to rally, are we behind the information curve or not? It's difficult to guess. That's why it's best to stay in the market rather than market time. What has actually happened is on 29th of November 1990, UN actually had a resolution 678. There was an instruction for Iraq to leave Kuwait. If not, the Western forces would come in. Check it out in history, you understand it. And what we can see is that market has years. In October, it was forecasting that there will be some resolution ready against all expectations. And as we know, US actually went into the war itself, defeated the Iraqis, and that's why market normalized. Not convinced? I have a second chart to show you. This is from World War II. This index is actually the German index. What we can see is that 1939 onwards, it rallied strongly because Germany was winning the war. Every country that it moved in, it conquered it very quickly. That persisted until end of 1942, whereby there was a battle called Battle of Stalingrad. That was Nazi Germany trying to move into Soviet Union. And as we see, German stock market peaked at that moment. Why? That was the first defeat by the Nazis. Hitler's army had to surrender after 5 months of fighting with the Soviet Union. It can be guessed that that's the turning point, that Germany from the victors have started to become the losers, and that is reflected in the German stock market. Let's look in terms of what has happened to the Japanese stock market. If we see over here where I've circled, you realize that the conquering of China, Pearl Harbor and Singapore were actually points whereby the Japanese stock market actually rallied. They were the victors at that period. But as we can see from history, the moment they turned losers, their stock market crashed. What I'm telling you right now is that the stock market is a forecaster. The winners of the war are priced in. I've still a further chart to show you. This is UK's index. What we can see is that when France actually went down to the Nazis, UK's index actually fell. That was in 1940. The bottom of UK's index was actually the Battle of Britain. The subsequent defeat in Stalingrad by the Nazis is also shown on that chart, and that were further bullish signs that UK was winning the war. Winners and losers, things can change very quickly. How does that relate to now? On 22nd February, that was actually when Putin has ordered recognition of the Donbass area. S&P 500 actually dipped 1.84% that day. In the subsequent 2 weeks ahead, S&P continued to lose. That was because it was widely expected that Russia would just roll over Ukraine, and this war would be a heavy defeat for Ukraine and the West. But as information is trickling out, Ukraine's resistance is bigger than expected. The thesis of a Russian quick victory was totally wrong. And that's why markets have since rallied from that bottom and is now registering a slight gain. The quick takeaway from today again is whoever who is winning the war is likely to see its stock market do well, and whoever is losing conversely will see a defeat in the stock market. But are we out of the woods? That's the million-dollar question. I've done extensive research into past wars to tell you that we are not out of the woods yet. Don't celebrate too early. If you have been overinvested, my suggestion is really to consider if you would like to cash out. If you are in retirement and you need to cash out funds, not selling at the point of market crash is correct, but if you really need funds, this rally out is a much better time to cash out. On the other hand, if you're accumulating general equities, continue to stick with your DCA or continue to go slow. Avoid jumping on this supposed bull market now and go all in. Then the question again is, what is low? Define what is low. Look very carefully at your cash pile, look very carefully at your investment pile, and decide a pace whereby you can tolerate a change of events. Because what I'm suggesting to you is that the war has many ups and downs. Things can change. If you'd like to find out my analysis on war, check out some of the material in the members channel. On 7th of March, I've actually predicted that Ukraine will be divided. We are getting new information now that is a strong possibility. I've also looked at past wars such as Finnish War, such as the Georgian War and the Chechnya War that Russians have actually fought. So if you're keen, join the members channel because war material is sensitive and it's a niche topic that only selected of you are very keen to find out a bit deeper on. So do check out the members channel in the links below. Now since you stuck to here, I have a last section to share with you, which is important information on what is actually moving on the S&P 500. This could be an eye-opener. Current year-to-date returns, the first on the list is Occidental Petroleum Corporation. Who is this company? This is something that Warren Buffett has recently bought for $4.5 billion. They are in the oil and gas business. And interestingly, Warren Buffett already has $6 billion allocated to Chevron previously. If you're thinking Warren Buffett has bought Occidental Petroleum Corporation at a low, it's not true. He's entered at a price where Occidental Petroleum has appreciated 90% already. That's why personally I'm still bullish on oil and gas sector. And that's why I have this previous video whereby I've allocated some amounts to a small oil and gas stock listed in Singapore. Other names on the list I can share with you a bit more. Halliburton Company, that is oil and gas. ConocoPhillips, oil and gas. Schlumberger, oil and gas. Chevron, needless to say, oil and gas. ExxonMobil, also oil and gas. Archer Daniels Midland, this is an agricultural company. If you haven't heard of it, you can imagine it like Singapore's Wilmar. They do farming and they do production, which is milling. Up next, Lockheed Martin Corporation. If you're not familiar with them, they're in the defense sector. You can imagine them a bit like ST Engineering in Singapore. Up next, Deere and Company. This is a company that is in the agriculture sector providing machinery. That is why I'm so bullish on commodities and I've done videos on it. But let's move back to what is popular. Microsoft has lost 9.7%. Apple, one of the better ones, losing 1.6%. Amazon, 1.1%. Tesla, 4.3%. Meta Platforms, minus 34%. Netflix, minus 37%. PayPal, minus 39%. Everything in big tech is still negative as of this moment, but they are popular names, unlike commodity players. So keep your eyes open as to what is really trending and what is needed by the world right now. Hopefully you've gotten valuable information from this discussion, and hopefully you've seen a bit on why I feel that there is a small chance that we haven't hit the bottom for S&P 500 yet. And as history has shown, each party is learning and each party is adjusting. The tide can change very easily and do not get caught off guard. If you agree with the message, smash the like button. And as always, if you're looking for topics on commodities, let me suggest some for you, especially if you've seen Warren Buffett allocating towards the sector and there's under coverage of what's really going on in the markets. With that, I'll sign off from here and see you in either of these tutorials. Take care and goodbye.